Macroeconomic uncertainty, the flight to safety, inflation, geopolitical tensions, and relentless money printing have created a perfect storm for the search for hard money. In nations like Venezuela and Zimbabwe, where hyperinflation erodes the value of local currencies, citizens are increasingly turning to Bitcoin as both a daily transactional tool and a store of value. Comparative analyses have repeatedly shown Bitcoin outperforming traditional safe haven assets during economic turmoil, underscoring its design as a bulwark against fiat debasement. Digital transformation in finance. As global banking undergoes rapid digitization, blockchain technology is ushering in an era of unprecedented transparency, efficiency, and security. Bitcoin stands as the immutable bedrock of this new financial order, borderless, open source, and programmable. Institutional investment and new products, the Wall Street embrace. The institutional wave is undeniable. Major financial institutions and corporations are rethinking their treasury strategies. Recent projections suggest that US spot Bitcoin ETFs could reach as much as $1 trillion in assets under management by 2030, a development that will funnel passive dollars from IRAs and pension funds directly into Bitcoin, amplifying the supply shock. Corporations such as Tesla, Strategy, Square, and innovative disruptors like Metaplanet are already pivoting, replacing traditional stock buybacks with strategic Bitcoin repurchases to build inflation-proof treasuries. Influential leadership and cultural momentum. The rise of the Bitcoin. Maximalist visionaries like Michael Saylor, Cathie Wood, Jack Dorsey, and Tim Draper have become the rallying cry for Bitcoin maximalism. Their public endorsements, combined with pioneering moves like the 2018 book, Bitcoin Standard, the decentralized alternative to central banking, convinced El Salvador's president towards adoption of Bitcoin as legal tender, are reshaping public opinion and accelerating global integration of the asset class. Meanwhile, market whales, those colossal players like Michael Saylor's strategy company with vast capital, execute massive trades that send ripples through the system, intensifying the network effect of Bitcoin adoption. Bitcoin, the path to financial freedom, from seed to giant forest, a market ripe for disruption. In a world where traditional assets dominate, real estate at $330 trillion USD, bonds at $300 trillion USD, equities at $115 trillion USD, and fiat money at $120 trillion, Bitcoin remains a mere fraction of the pie. Yet, with a global asset pool exceeding $900 trillion USD, even a small reallocation toward Bitcoin could spark a monumental revolution. Imagine a chart where Bitcoin's modest market cap today is only the prologue to an explosive chapter of growth tomorrow. As more fiat money flows into Bitcoin, fueling a relentless supply shock through halving cycles and accelerating corporate deposits, the available float of coins diminishes. Think of Bitcoin as a unique closed-end bank. Each new deposit or purchase removes satoshis from circulation, much like an exclusive share in a rare commodity whose value skyrockets with scarcity. This isn't a pump-and-dump scheme. It's akin to the enduring appreciation witnessed in prime real estate, where true ownership begets lasting wealth. Reverse bank run, a paradigm of value transfer. Envision the concept of a bank run, but in reverse. In a traditional bank run, depositors withdraw funds en masse, precipitating collapse. With Bitcoin, the dynamic is flipped. Supply shock, the scarcity engine. Bitcoin's fixed supply of 21 million coins is its ultimate superpower. Unlike fiat currencies that can be printed at will, Bitcoin's scarcity is hard-coded into its DNA. Each halving cycle, occurring roughly every 4 years, cuts the rate at which new coins are minted, thereby intensifying scarcity. As institutional deposits pile up and long-term holders remove coins from active circulation, a phenomenon known as decreasing float, even modest demand increases can trigger significant price surges. The real estate analogy, lasting wealth through true ownership. Like prime real estate in a coveted location, Bitcoin's scarcity and true ownership principles set it apart as an asset class for the long haul. When you control your Bitcoin with your private keys, you're not just holding a digital token, you're securing a piece of the future financial landscape. As demand intensifies and supply tightens, Bitcoin's price could mirror the enduring appreciation observed in physical property markets, rewarding those who hold for the long term. Strategy BC, the battle for hard money, a call to action. Bitcoin's rise isn't coincidental. It's a direct response to relentless money printing, diminishing purchasing power, and the global quest for absolute scarcity.